Hello, greetings of the day. This is Professor Ramakrishna and welcome to my YouTube channel Archiversity. In my previous two lectures, I explained you how to calculate trading account and determine the gross profit, and next is how to calculate a profit and loss account and determine net profit separately. Normally, what is that we do is we calculate trading and profit and loss account together and at the same time. The idea of explaining previous two lectures separately is that you will be given a more in-depth understanding of various items which are available in trading account and profit and loss account, and do not get confused with different accounting items. So in this lecture, I am going to show you how to calculate trading and profit and loss account together. Just to remind you, in a trading account, we consider net sales and direct expenses, and whereas in profit and loss account we consider other income and indirect expenses. So expenses are shown on a debit side of the account, whereas incomes are shown on a credit side of the account. Whether it is a trading account or a profit and loss account, incomes are shown on credit side, whereas expenses are shown on a debit side. Only difference is direct expenses goes to a trading account, indirect expenses goes to profit and loss account. So here we have our details, that is prepare a trading and profit and loss account of Messrs. Rajat and Co. from the following information related to March 31st, assuming the 2021. So here, first of all, from the various items that we have, we need to identify to which account these items will go. So when it talks about land is an asset, so it goes to the balance sheet. Building again is an asset which goes to the balance sheet. Drawings is the amount withdrawn by the promoters from the business, so this is shown onto the equity side of the balance sheet, that is the liability side. Purchases is a direct expense, so this goes to trading account and debit side. Wages is a direct expense, so trading account, debit side. Factory expenses is a direct expense, trading account and debit side. Sundry expenses or miscellaneous expenses, so this is indirect expense, so profit and loss account, debit side. Rent and taxes is an indirect expense, so profit and loss account, debit side. Bank balance is an asset, so this appears in a balance sheet. Opening stock appears in a trading account, debit side. On the other side we have a capital. Capital is shown on the liability side of the balance sheet. So bills payable, again a balance sheet item. Creditors is also a balance sheet item. Sales is a trading account and shown on credit side. Closing stock is a trading account shown on a credit side. So using these, now first we calculate the trading account followed by a profit and loss account. So to get our trading account, so we'll write trading and profit and loss account of Messrs. Rajat and Co. We also write year ended March 31st 2021. Now we make this into a T account, two sides, debit side, credit side. I am not paying too much attention to the format, so you need to be very particular about the formats in your academics, otherwise in practice not required. Particulars, and then you will have a amount in rupees. So here also particulars and amount rupees. So first we look at trading account credit balances. One is a sales and second one is a closing stock. So we have a sales worth of rupees 8 lakhs. Then we have a closing stock worth of rupees 30,000. So these two are posted, so we'll mark a tick mark here. Then here trading account debit side, purchases, wages and factory expenses and opening stock. So we'll start with the opening stock 20,000. So as this is posted, we mark a tick here. Then we go for purchases 5 lakhs, purchases 5 lakhs. Then this is done, and the wages 50,000. Then factory expenses 25,000. So no other item in a trading account. So we will balance. So whichever side is highest. So this is highest. This is 8 lakhs 30,000. We close this and we transfer the value here 8 lakhs 30,000 and we calculate the difference, that is your gross profit. So 5, 5, 10, 3, 8, 10, so 3, 13, 1 is a 6, 2. So 2 lakhs 35,000 is our gross profit. So we'll cross check this one. 8 lakhs 30,000 minus 20,000 minus 5 lakhs minus 50,000 minus 25,000. So 2 lakhs 35,000. So 2 lakhs 35,000 is the gross profit that we received. Now we'll bring the gross profit here. Gross profit brought down. So 2 lakhs 35,000. Now this is our P&L account, profit and loss account. So here, what are the items that appear in your profit and loss account? On credit side, there are no items. On debit side, we have a sundry expenses 5,000. Sundry expenses 5,000. So we enter this one. Then rent and taxes 15,000. Rent and taxes 15,000. Then bank, no other item is here. So only 2 items. Then we will balance this. So 2 lakhs 35,000. So here also 2 lakhs 35,000. And difference between this is our net profit. So 0, 0, 0, 5, 5, 10, 2, so 1. So 2 lakhs 15,000 is your net profit. So this simple is calculating your trading and profit and loss account. So we'll do with another example quickly. So purchases comes to your trading account, debit side, coal and gas trading account, debit side, factory expenses trading account, debit side, salaries profit and loss account, debit side, rent profit and loss account, debit side, discount profit and loss account, debit side, advertisement profit and loss account, debit side, debtors is into balance sheet, drawing balance sheet, loan balance sheet, petty cash again in a balance sheet, sales returns your trading account, credit side we deduct this amount from sales. Then machinery is into balance sheet, land and building balance sheet, income tax is a tax that we paid. So profit and loss account, credit side, furniture is an asset in a balance sheet. On the other side, this is a commission received, profit and loss account, credit side, loan liability, balance sheet, bank overdraft liability, balance sheet, sales trading account, credit side, creditors the amount that you owe, liability in a balance sheet, capital in a balance sheet. So here we'll first prepare a trading account. I'm not writing all the details, so simply to save our time I'm showing the calculations, debit, credit. So on your debit side, in simple terms we say all expenses and here income. So particulars, then you have a amount, it is measured in rupees, amount and in rupees. So in our trading account, first we look at the credit side. We have a sales 80,000 and there are a sales returns. So sales returns is 1000. We will deduct that one, minus returns 1000. So your net sales is 79,000. We'll put here. Then no other item in trading account credit side. Now trading account debit balances. So we have a purchases 50,000. 50,000. Then coal and gas 6,000. Factory wages 11,000. Then salaries into profit and loss account, profit and loss. So we'll mark here. So purchases entered, coal and gas, factory expenses, sales has been entered. Then which items that we have in trading account. So sales returns we posted. There is no other item. So we have a highest value here. So 79,000. We close this and we'll bring the value here, 79,000, and we calculate the gross profit. So 617 plus 29516 plus 17. So gross profit is 12,000. Now here gross profit brought down, so 12,000. And any credit item in your profit and loss account. So this we say that profit and loss account now. So you have a commission received 5,000. So we'll enter value here. Commission rupees 5,000. So this also entered, and these all not belongs to our accounts. And here salaries 9,000. Salaries 9,000. Then rent 4,000. Then your discount allowed 3,000. And then your advertisement expenses 500. Then debtors will not be here. Drawings, loan, petty cash, machinery, land and buildings. Income tax 100. So there are no other items. We posted all the items. Now we balance this. So this is 15,000 plus 2,000, 17,000, and here also we write the 17,000. Then we'll determine the net profit. So net profit equals to 500 plus 600. This is a 400. So this is 1000. 9 plus 1, 10, 14, 17. So net profit is rupees just 400. So this net profit of rupees 400 will transfer to the balance sheet. This is how you are supposed to calculate your trading and profit and loss account. Because of a time constraint and because of online, I didn't pay much attention in the format of a trading and profit and loss account. But during your examinations or your academics, so you need to be very particular about this format. So your particulars, inner column, outer column, then heading for your trading account, heading for your profit and loss account, then determining the gross profit and net profit. So that is for academic purpose, it is very important to have a neat format, or presenting your trading and profit and loss account in a neat format is much advisable. So with this, my lectures on making you comfortable or making you ready for preparing of a trading and profit and loss account has been done. The next step is that after you are done with your trading and profit and loss account, or during the process of a trading and profit and loss account, you are supposed to prepare closing entries. So in my next lecture, I'll show you how to write a closing entries for various items that are involved in trading account, profit and loss account, and your gross profit as well as a net profit. So closing accounts becomes an important and integral part of your final accounts. Thank you for watching my lectures. Thank you for your patience. Keep watching and enhance your knowledge in financial accounting. And if you find any discrepancies, suggestions and all, please do share them in the comment box of my YouTube channel. I will be able to answer to your queries. See you soon with a new lecture on closing entries.